following presentation is for educational purposes only. All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.
And welcome back to NinjaTrader Live. I'll be your host for this segment, Technical Analysis Explained. Today, our topic is going to be Heikin-Ashi charts. Now, Heikin-Ashi charts are a relatively new type of chart. And I say relatively new because they're based on candles, and candles go back about 4 centuries. So anything would be relatively new, but Heikin-Ashi is relatively new, I would say in the last couple of decades. I might be off by some years, but Heikin-Ashi is a Japanese term that's putting together 2 Japanese words, one for average, which is Heikin, and then Ashi is pace. So it's an averaging pace. And Heikin-Ashi charts are meant to decode or smooth out some of the moves in a candle chart. So let's just quickly review what a candle chart is. Candle chart is the same as a bar chart, containing the same data, open, high, low, close, but it expands on the the range of the open and the close, calling it a body, and gives a little bit of color to give direction. So whereas a bar chart, you just see the open, high, low, close. It's a stick. It's got an entry and an exit point. Kind of a smart way to do, kind of show time flow with the chart. Candlesticks give you a little bit more. And so I'm looking at a candlestick chart now, and very simply, I'll look at the last couple of bars. Here we have a big bearish bar. How do I know it's bearish? Because it's red, and red is associated with a downward move. But it's red because I know that the top of that body is the open, where the market opened on that time period. This is a daily period. So yesterday, the market opened up here. And let me bring up my crosshairs so we can see that a little bit better. Right here at this price, right? 52.71 and about a quarter. And then it closed down here. These wicks are simply the range, the high and the low. So you get a sense of direction that you can see with the coloring. All good, right? Well, somebody had a great idea, which is to let's see if we can identify trends a little bit better. Because as you know, we've been in an uptrend since beginning of this year, even before that, and end of October right here. But during that uptrend, we do have some bars that are red, right? There are some retracement bars. There are some more than a couple strung in a row, right? And that's kind of a pullback, right? But the question is, does this indicate maybe a trend change? How strong is that reversal? Is it going to be something that holds, or is it just a pause, right? Or a temporary setback before we return to the uptrend? Not so easy to see with the candlestick chart, right? We've got these big advancing candles, but we've also got these smaller body candles. Some might call them dojis if they're really close with the open and the close. And then you've got small bodied, like this red one here in the middle of an uptrend. What do I make of that? So Heikin-Ashi was meant to kind of smooth that out. Are we in an uptrend? Are we in a downtrend? And when could it be changing? That's what Heikin-Ashi attempts to solve. So let's take a look at it. Now, for those of you asking, how do I get a Heikin-Ashi up on my chart? Well, the first thing I would do is go to my internet browser, right? I'd go to my search engine and I'd type in NinjaTrader ecosystem and then Heikin-Ashi. And Heikin-Ashi is spelled Heikin-Ashi. And if you type that in, you will come to a page that allows you to download that NinjaTrader indicator off of the ecosystem. And once you import it into your ecosystem, or into your indicators, you can actually apply it as an indicator. So it because it's an adjustment of data, we need to use an indicator. Here's the indicator list. Now I've already imported it, and I'm just going to change my candlestick chart to a Heikin-Ashi chart. And it's actually Heikin-Ashi 8 for NinjaTrader 8. I'm going to add this and hit apply. And Mission Control, if you don't mind, there is a link to Heikin-Ashi, the Heikin-Ashi NinjaTrader ecosystem link. We can drop those in the chats. So right away, it looks a lot different. In fact, it looks like it has more green candles representing the uptrend than red candles representing the downtrend. And let's take a look and see what happened. What did I just do by applying the Heikin-Ashi chart? Well, the Heikin-Ashi chart, it's not actual prices that we're necessarily seeing. I want to be very clear about that. Each one of these values on the bar, on the Heikin-Ashi bar, are manipulated. Okay, they're calculated. They're different than what we would see on a candlestick. And I'll bring up a comparison chart in just a moment. But the price, the close price of a Heikin-Ashi chart, you'll notice over here, this is the actual price of, here we have the E-mini, 52.4250. And you'll notice it doesn't really line up with the Heikin-Ashi, right? Doesn't line up with the high or the low or the close or the open of the Heikin-Ashi. That's because this data is manipulated. And what it is, 4 different values manipulated kind of 4 different ways, 3 different ways. One is to find out what that close value, this value right here at the bottom of the Heikin-Ashi, 52.1875, is the average of the open, high, low, and close of the current candlestick. Okay? So that's the average, right? We talk about Heikin. Heikin means average. Average, the close price or in this case, the close price of the Heikin-Ashi is an average of the open, high, low, close of the candlestick. So right away, I know that this value right here, the close value, the current value of the Heikin-Ashi chart, isn't a real price. It's an average, but it isn't where the market's trading right now. Market's trading slightly above. Okay, that's fine. That's the close value. Now, we also have the high and the low values. And the high and the low values are, it's an interesting comparison because they're not an average of like the candlestick price, right? The candlestick price being open, high, low, close. Some might call it a typical price. Typical price is high, low, close. Throw the average in there, the open in there, you've got the average. The high price is the greatest value of the current price on the Heikin-Ashi, or the well, let me go to the open first, I should say. It's the open price is the average of yesterday's open and close. So if we look at each bar, you'll see that the top of the body is halfway between the previous body. So this value, this open on the Heikin-Ashi, is halfway between the open and the close of the previous body. It's always going to be halfway between the previous bar. Okay, so that's something we should notice. Here's the open on a green candle is at the low of the body. That's halfway between the previous body. Okay, so that's an averaging of sorts, right? It's an average of the previous bars, open and close. So we've got the open, we've got the close, and then we've got the high and the low. Now the high and the low are a little different. It's an average of it's not an average. It's the greatest value of the high, the open, or the close. And that's what either makes wicks or it doesn't make wicks. So if there's a difference between those values, you'll see maybe it isn't at the open, maybe there is a wick. The high is it's the greater version of the high, the open or the close. And when we're talking about open and closes, we're talking about the Heikin-Ashi bar. When we're talking about high, we're talking about the actual value. So it can or may not be the real price of the candle. So basically, we do these manipulations to the data and we get a smoother look at trends. Look at how many look at how many bars in a row that were red before it turned around and turned up into a nice green trend. Now, the way I look at this is there's 5 things I take from this chart when I look at a bar or look at the successive bars. And it's looking at the body of the candle. We can have basically, or the candle, the Heikin-Ashi candle in its entirety. We can have kind of 5 interpretations, right? We have green and red, which are 4 of the interpretations. We can have a strong green, which means we have no wick on the bottom. When you see a candle that has no wick on the bottom and it's a green candle, that's a very strong trend. We are in a trend. When we start to see wicks on the bottom, so that's one interpretation. In an uptrend, no wick on the bottom, strong trend. When we start to see these wicks on the bottom, even though it's green, we start to see that. Could be that the trend is pausing, maybe even reversing. Now, it didn't happen here. And how do I know that? The next bar, we don't have a wick down here. So it's resuming the trend up. As soon as I start to see wicks, then I'm thinking pause, possibly reversal. Okay. Now, before we see that reversal, though, we'll probably see some doji type looking wicks or very, very small bodies with wicks on the top and the bottom. And even then, we did get some red body candles here, but it turned right around. We didn't see those shaved tops that we would expect in a strong downtrend, right? We still see wicks, but now the wicks are green and they're gone, and now we don't have a wick, and it's uptrend again. And then we see wicks start coming in on the bottom, even a red body candle, but we didn't see the wick on top go away. We still resume. Now, here's what happens. We turn around, we've got a pullback, and we've got no wicks on the top. That to me, we're in a downtrend. Now, how long? I don't know. That's not what this is telling us. This is just telling us what kind of trend we're in. We have a turnaround, we have a wick on the bottom and the top, green body, and then we have no wicks on top. We're in an uptrend, and so on and so forth. So maybe it's better if we see them together, right? I'm talking about this. Let me go back to this chart. I'm going to blow this up to the size. And you might even now, right, be able to see which one is the Heikin-Ashi without looking at the labels, because Heikin-Ashis tend to have clearer trends. They have clearer clusters of red and green candles. And so you'll notice right away, during an uptrend, we had a lot of green and a lot of red mixed in together. But the Heikin-Ashi doesn't really have a change in those candle colors till we get to the top. We start to see the wicks up in the top, and then we turn down. Wicks on the bottom, rather. We start to see wicks on the bottom, and then it's okay. Well, now we're switching over maybe to the downside, and we see these red candles, and then we turn up. We continue that trend up. A lot of inconsistency here. A lot of up and down. Big wicks on top, wicks on bottom, and then a turnaround where we start to see the wicks disappear on the top. That might be the start of a new trend. We're looking at the 10-year, and you could see that these trends tend to cluster. So that is the 10-year looking at a daily chart. And you could look at these on different time periods. I could switch this to, let's say, a 10-minute chart like we like to use in our morning shows and our bars closing sometimes, and they can help as well. Now, 10-year today was a little bit wavy, right? A little bit responsive to news, but you can see in times even when there's you know, prices that are prints, but we don't have a lot of range, there's low volume, you can still fill out those bars because they are using the previous bar's data, right? We know the open is the average of the previous day's data. We have a close. That'll create a body, right? That'll create a body where sometimes we only have one print or one trade. So this will help us focus on that trend. Now, something else that you could do is you can apply studies to these charts. Let me go to a different screen and bear with me one moment as I bring up that other chart that I had before. Sometimes what you'll find is when you apply a regular study, let's go to our indicators and let's add, this is a daily chart, let's add a 20 period moving average. I'm going to use the simple. So I'm going to scroll down, SMA, we're going to go add, and then we will calculate on each tick. Let's see if this works. Well, you know what we're going to do? We're going to make it easier to see. My default has goldenrod. I'm going to make that a bluer color. We'll make it a little thicker and we'll make it dashed so we don't really, there we go. And what you'll see is sometimes these when the moving average is calculated on a Heikin-Ashi, there are and it's hard to compare right now. I don't have that ability. Um, you'll see that the moves like piercing the moving average will pierce on the regular chart, but it might not pierce on the Heikin-Ashi chart because of that averaging. And you might, if you use signals with indicators, those signals that might get you whipsawed in a regular trade, you know, a quick close down and a quick close back in above a moving average would be somewhat of a whipsaw effect. With the Heikin-Ashi, it prevents you from getting into that. So we can use this on any market. And comparing, let's go back to our other chart that had both of them on there. We'll go back to a daily, very easy to do on the NinjaTrader 8 platform. And you know, these trends are easier to see. These colors, I've got a little bit of a darker green on my regular candlestick, but the idea is still there. We've got a bunch of green candles mixed in with these red candles, and a lot of them are equals and opposites. And you think, wow, like right here, let's look at this. Let's blow this up a little bit. Here we have a bullish engulfing pattern, right? Bullish engulfing pattern. Boy, it says it in the name. It's bullish. Maybe we're ready to return, return up here on the 10-year. And what's happening here on the Heikin-Ashi? Nope, it's still bearish, right? So if you're looking for ideas where what else can we be looking at to help us with the idea that the trend is still in play or the trend might be pausing, even reversing? Sometimes we have these candlestick patterns that are just 2-bar patterns that say, hey, bullish engulfing right here. Look for a reversal. But then you have Heikin-Ashi saying, no, there's no reversal. Now there might be a little bit of weakness. We start to see a bit of minor wicks on the tops, but we're still in a downtrend. We still have these red body candles. So, it could be another piece of evidence that might even prevent you from getting into trade rather than getting in one. What's happening here? We've got a very small body candle after a very big uptrend. Um, well, okay, the Heikin-Ashi reflects that. A little bit of possible follow through, but this big candle turns everything right around pretty quickly. So you can have these even what they call a shaved body, right? There's no hair, there's no wick, there's no whisker right there. You could even have that turning around this market, but then quickly doji, big wick on top, big wick on bottom. That to me is a warning sign to turn right around. I want to just reiterate though with Heikin-Ashi charts, the prices you see here are not the traded prices. And excuse me, you can see that on the chart, the way that I get reminded about it is the fact that this value right here is pointing to the most recent price, the most recent price for the 10-year. This is 10-year yield. So I look at this and it's pointing to a part of the wick. It's not parting to the body right here. If this were a candlestick chart, I would expect this pointing to be at the top of the body. It's not. It's pointing up here. So this reminds me. I mean, I have enough familiarity with this. I should look at this chart and I see, well, two things jump out. When it trends, it trends. It's got a lot of green successive candles. It's got a lot of red successive candles. And those candles have, when they're in a strong trend, they have one part of the candle with no wick. That's unusual. That's unusual, right? I mean, look at this. Even when they're in a strong uptrend, you've got wicks on both sides. You've got wicks on the bottom. You've got downtrend. You've got wicks on top. Not true with Heikin-Ashi. When it's in a strong uptrend, those wicks are gone. And that's when I know, okay, we're probably still in an uptrend. Even though there might be some variance here, we've got this little doji top here. We're still in an uptrend on the right here, lined up here on the 12th. We're still in an uptrend on a Heikin-Ashi. So even though this is a what is it? A bearish harami, not an engulfing pattern, but the body is within the previous body's candle, didn't really advance, looking a little bit bearish. Heikin-Ashi is saying, well, game on, right? We don't have any wick down here. Now the wick does show up the next bar on this bar, but you're telling me that this trend is kind of stalling just because it has a wick there? Maybe, maybe not. I want to see further proof. And it doesn't follow through. Yes, it's showing signs of a little bit of weakness. Can't a wick here, none here, a wick here, little wick here, none here. But that to me is just, okay, maybe the trend isn't as strong. Maybe it is coming to a point. And then when we start to see wicks on the bottom, and then the body turns into red, okay, maybe this sideways trend is starting to show this is a weak market. This 10-year yield is a weak market, and we might see a little bit of a trend change. Guess what happens? We see that trend change in price, and then the Heikin-Ashi confirms it. And interesting, it just almost looks like a DNA helix, right? That spirals and changes, but consistent coloring indicates a trend. Consistent coloring indicates a trend. Wicks, no wicks, indicate a strong trend. In an uptrend, we're looking at wicks on the bottom. In a downtrend, we're looking at wicks on the top. So that's really what I have about Heikin-Ashi. I don't think we can talk about it too much more. It's a very good trend indicator way to look at the market. You just have to be very careful and realize that if you're looking at a Heikin-Ashi chart and you mouse over, you do have the different values. You have the bar values or the candle values that come from the market, and then you have the Heikin-Ashi open, high, low, close, which are at the bottom of that window. And all I did was I took my mouse and I pressed on the mouse wheel over that candlestick, and I got all the data that's contained within this chart, which is, of course, the underlying data, which is as normal, which we see as normal, and then also the Heikin-Ashi open, high, low, close. But I don't really care about those prices. What I care about is, are we trending? Do we have wicks? And that's really about it.
All All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.